Well, thanks for joining us here on a Monday as we start out the first trading day of April and the second quarter of 2017. Hard to believe we're in the second quarter already. Just got some new information in from USDA, hot off the press just moments ago. Let's take a look at what it is. It is our export inspections for this past week. Let's go take a look at what the numbers reveal. So as we look at the export inspections on the corn, we had a total this time around of 1.48 million tons. That compares to the week before when we had a total of 1.57 million. And we had sorghum at 138,420 compared to last week's total of 166,299. By the way, back on the corn, a year ago that total was 1.09 million. So we're still outpacing what we had a year ago at this time. And also noteworthy here, the marketing year-to-date numbers on the corn stand at 33.33 million tons. A year ago at this time, that number was only 19.65. So tremendous increase on the corn export inspections this year compared to last. Soybeans, 620,725. Last week was 555,000. A year ago, it was only 226,000. So a sharp increase there, actually. Current marketing year-to-date numbers on the soybeans are running about 5 million ahead of where they were a year ago at this time. The wheat, 559,646 compared to the week before when it was 545,686. So fairly consistent there, just slightly higher. A year ago at this time, it was 327,000. And the marketing year-to-date numbers on the wheat are now almost exactly 5 million tons ahead of where they were a year ago at this time. Let's talk with Steve Georgy of Allendale Incorporated in McHenry, Illinois, to get his thoughts on these numbers and Friday's numbers and the trade reaction. How you doing, Steve?
Not too bad. Thanks for having me on again.
Yeah, thanks for helping us kick off a brand new trading quarter here. It's like a breath of fresh air. Finally, people have something else to talk about. They don't have to look at those reports coming up anymore. So what are you focusing on today? I understand you're getting a lot of phone calls today.
We are. A lot of phone calls, but, you know, a lot of chatter around the markets. Yes, these inspections, just to start with that, they are good. It still shows that we do have good demand. But one thing that we can't forget, what USDA just told us on this last report, is that we have a lot of stocks, so we better have a good pace as well. And we are. And so, but a lot of chatter today, new month, new money type ideas, and really, can we see it stay consistent? We know the beans started off higher. We do have them a little lower right now, but how do we finish the day today? Can we see some strength? If so, you know, we need to get something going, some kind of momentum to really propel us, because some of these numbers we got from USDA, I mean, they are bearish in beans. Quarterly stock numbers, bearish corn, bearish beans. And so the acreage side of things, they came right in line with what we had from our survey that we had done from the general public out there and all the farmers. And so, you know, I don't think that was a surprise, but we do have a lot of corn on hand right now. We've got a lot of beans too, and so these inspection numbers, we need to see these sales continue.
May corn currently 4 3/4 higher at 369, and December 4 1/4 higher at 392.5. So they're maintaining most of the gains that they've developed over the course of the early morning. On the soybean trade, they tried to rebound overnight, and that kind of gave way about 15 or 20 minutes into the session here, as we have gone lower by 2 cents on the May at 9.44, and November up a half cent at 9.54.5. So very quiet action in the soybeans. On the wheat trade, though, lots of movement on the wheat to the upside. We have May Chicago wheat 5 1/2 higher at 4.32. In Kansas City, we have the May contract now trading 3 1/2 higher at 4.24. There's been a lot of discussion here, Steve, about the fact that the commodity funds are so incredibly short in the wheat market, and they are saying that there's so much with everybody lined up on one side of the boat, as they like to put it, that it wouldn't take much to make the wheat market bounce back.
Well, that is true. And it's not only wheat, it's also corn.
Okay.
I mean, the CFTC report that came out on Friday is showing funds position, you know, and they're estimated right now still short almost 133,000 contracts of wheat, but they're also short 137,000 contracts of corn.
Well, there you go.
And so when you look at that and you say, hey, what is changing as we go forward? Do we really need to be this short? And that's what kind of, it feeds the idea of, maybe not so much there's something bullish, it's just I don't want to be this short anymore. And so you start to see them get out of some of their positions, and does what is happening today, and we start to get this rally or get a bounce, even though fundamentally, though, we know things are still bearish. But they are extremely short, and I think that may cause some short covering here in the short term.
It's especially interesting when you're just now starting the growing season. So, Steve, there'll be a lot to talk about moving forward, that's for sure. I'll bring you back here in a moment. We'll discuss this early trade in our livestock market when we come back right after this. We'll resume our conversation here with Steve Georgy of Allendale Incorporated in McHenry, Illinois. We cover the grain side of things here. I want to ask you about what's going on in this livestock trade here. A mixed assortment of things going on in the cattle and the hog markets here early today, Steve. Lots of direction from sharply lower beef cutout value that occurred on Friday. And we're getting mixed signals here in the hog trade as well. Let's go ahead and dive into the futures trade, get everybody updated on prices, and then I want to get your comments on this. On the live cattle market right now, we've had the April contract now trading 15 lower at 119.80. This market has just been all over the board this morning. June live cattle now bouncing back to go 31 higher at 111.18. It had been as low as 110.42, so we're 70 cents off our low of the day, but we backed off our high by about 40 cents. August now 45 higher. On the feeder cattle side, right now you have your feeders on the April contract 13 higher at 134.08. But my goodness, earlier today we had a low of 132.95, so we're off our low there by about $1.10 or 15 cents. May now 25 higher at 132.95. So this one has a lot of people scratching their heads on what that means for the future direction here in this cattle trade here.
Yeah, you know, the big thing on cattle, though, the interesting thing I should say is we talked about the funds positioning in the grains. The funds right now in cattle, they're still long. These guys are looking at the discount between where we've got cash and where we have futures. And they're still coming into this side right now, and we basically have 3 weeks now of strong buying from the CFTC report as far as the fund positioning on cattle.
Let's take a look at the lean hog trade while we're at it here. And on the lean hog market this morning, now you have April just a nickel higher at 65.72. The May contract firming up to 70.40. That's on the high of the day now, and that's up 55 cents. The June is up 17 at 74.02. Check that, 15 higher at $74 even. So it's kind of stuck in the middle of its trading range over here. It looks like a lot of folks have rolled out of the April into the May contract now, or maybe June.
Yeah, we've seen a lot of that as well. You know, big thing in hogs, though, is that when you look at it, it's become more of this technical picture for hogs. You know, we can look at the fundamental side, looking at reasons on why you should be bullish or bearish. But really, when you look at a chart, we've been hovering right around this 200-day moving average. Everyone is trying to figure out what is our next move. Where are we going? What is going to change? And right now, there's not a lot of news out there, and as we were said here in the previous weeks, we probably will remain choppy for hogs, even through this week as well, but just expect some choppy trade right around this 200-day moving average for now.
In other words, you're saying more of the same.
It is, until we get something to change. What is it? Is it going to be demand? Is it going to be what? Right now, it seems like this market has been very quiet. But that also, when you look at some trending markets, the hogs they get on an idea and they just go. Whether or not that's higher or lower, we're consolidating right now, and that's really what we're forming.
All right. Thanks, Steve, for all the insight into the markets. Excellent conversation. Steve Georgy of Allendale Incorporated in McHenry, Illinois. Love to talk to Steve. Interesting stuff.
Interesting, for sure.
You
Okay.
bet.
Thank you so much, Markets Editor Marlon Bowling.